with that, Kyle, I think we can dive right into our main topic. What is a decentralized autonomous organization? Kyle, you want to explain?
Sure. So this idea of a decentralized autonomous organization comes from the blockchain scene and smart contract enforcement. So essentially, we have a lot of these protocols or a lot of these blockchain-based solutions that are really just lines of code that execute transactions or allow you to do certain things that don't require manual oversight. We've talked about Uniswap being a decentralized exchange where you could have any type of asset and swap that with a different asset. That doesn't require any middlemen. It actually can just be done with a smart contract that they were able to build. We see many examples like this. You even see examples like MakerDAO, which is essentially they've issued the DAI stablecoin, which represents a one-to-one stablecoin with the US dollar. And this is essentially a decentralized autonomous organization because all of the decisions of the protocol and of the changes that can be made to that platform actually come through the share of governance tokens. So instead of having a centralized party making the decisions and therefore profiting off of this opportunity, instead they share the voting rights with the rest of the community. And so this idea of a decentralized autonomous organization allows for the community to control the things that they use, which tends to align the incentives with those that actually use those things, being the ones that are more incentivized to want to have control and decide the operations for the organization. And so this is something that was very prevalent in the crypto and blockchain space. And recently we saw Wyoming become very forward thinking and actually embracing the DAO, Decentralized Autonomous Organization, DAO, embracing the DAO as a legal entity. So they actually created a registration process where you can file articles of incorporation. You can actually have your documents around creating a legitimately recognized DAO by the state of Wyoming and be licensed in order to do that and actually have participation with your community. So this has been fascinating. We've seen some examples of these come out, and now there's a pathway into a legally compliant DAO, and that's kind of where we kick off our conversation today.
I think that's a huge deal, right, folks? We are talking about crypto, which is decentralized by nature. You got a lot of developers all around the world working together to make something happen. So naturally, you do have some form of organization, but the autonomous part is where you mentioned this governance token or smart contracts, leveraging blockchain technology to automate a lot of these processes and to be able to participate, just like you said with Uniswap or some of these other decentralized protocols. The community needs to weigh in and they need to vote, and they have these governance tokens to do that, and thus they can power this decentralized autonomous organization, this DAO. And I guess Wyoming has really been forward thinking here, recognizing that people still need to leverage real world stuff like bank accounts and things like that. And in this case, you do need to register a business of some kind, an LLC usually, to go ahead and get recognized as the organization behind it. Now, of course, someone is managing that, so some people think that there's a lack of potential true decentralization, but at the end of the day, this concept of being able to launch an organization that's decentralized and you can work together and power it through technology thanks to the blockchain, now that for sure is majorly disruptive. And of course, as a result, we are now going to step on the lines of securities laws.
Absolutely.
We recently saw that the SEC came out and paused 2 different tokens that were part of a DAO that was registered in Wyoming. Kyle, you want to break this one down for us?
Sure. So just like we were talking about, what we've seen, I think, is the SEC, of course, isn't just going to let everything fly here, right? Just because we now can register as a DAO doesn't mean you're able to get away with everything that you want. You can't just say, oh, it's autonomous, it's, I'm removed of liability. That's just not how it works in the real world. And so in this example, what we have is actually we need to differentiate this idea of creating a DAO, which is the entity that represents or is the public-facing entity of the assets that are represented by that organization, and the potential token or tokens that are used within the system. And so yes, you can create a DAO, maybe not be able to create any type of token or thing that you want to issue through it. If it looks like a security and smells like a security, you may have to follow securities laws. And that's kind of what happened here. So basically, you've got a company called American Crypto Fed, which is quite a name, and they issued 2 tokens, the Ducat and the Lock tokens. And they claimed that these were utilities utility tokens, used inside of the platform, inside of their organization, potentially for voting, for transactions, and some other things.
The so-called governance tokens.
Exactly right. Now, they filed an S1, which is a public registration form to register as a security, but they said, no, we're going to file this as a public offering, but we are not recognizing it as a security. We are recognizing it as a utility token. Therefore, it doesn't have any actual asset that's represented or underlying to this digital token. And the SEC said, not so fast. I don't think that's really how it works. You can't just say that you're publicly registered and you're following all these laws, but you can just issue whatever type of token you want. And so they basically shut those down and said, this is not going to work. You are misleading or potentially misleading those that may be investing in your asset because they think that they're getting a potential part of this company or this organization, even though, again, DAOs maybe or may don't have a cap table or however those things are structured. I think that the SEC and everyone are still trying to work some of those things out. But we saw some interesting fireworks going on here.
Yeah, needless to say, of course, the CEO fired back and even wrote to CoinDesk saying that, this is just the lack of a clear, transparent, lack of a framework for crypto assets. And in this case, them trying to be compliant, perhaps by filing an S1 and becoming a public security, might have been going a little overboard, given the fact that, of course, now they need to comply with a lot of different regulation. Like you said, they need to now have audited financials, need to have a lot of this information that maybe this DAO didn't have. Regardless, the SEC did say that they misled investors and that they didn't have accurate documentation, and so therefore they paused these tokens. They are now going over to an administrative law judge to see if they'll actually be suspended or full-on denied from moving forward.
Yeah, it's fascinating, especially, again, if you're talking about an autonomous organization, one that doesn't have centralized control. I understand the perspective of the fact that we need some way to create decisions inside of the company, and with DAOs, we've seen the governance token model can be very effective when applied correctly. So you can see how American Crypto Fed may be trying to make that angle, but again, a two-token model, I'm not fully sure exactly how those tokens are represented inside of the organization, but we would expect that an S1 filing as a security, it does start to get very confusing. If you're going to file a public document claiming and recognizing yourself as a security, I can see how that would be confusing to an investor who's looking and expecting to have a security. But they make a good point. Maybe there should be some type of other regulation for establishing compliant assets that don't fit the security token.
And that's the lesson here, folks. Look at those governance tokens. See what people are offering you. When they start to have rewards and yield and other type of things, that might make it a security. Regardless, it's very important that it may not be, or it definitely can't be a security, because that might actually destroy the organization. Right now, they have to do all these other things in order to comply, which American Fed, I guess, was trying to do, but apparently the SEC said they didn't do it so well. So that's very interesting. There are successful use cases of governance tokens out there that are not securities, so this definitely is possible. But folks, now we have to check it out and understand, in some cases, especially as people now push these boundaries and Wyoming says, come register your DAOs, watch out, because some of these governance tokens, they just might be securities.
So to answer the ultimate question here, can DAOs be security tokens? The answer is overwhelmingly yes. You could potentially have voting rights in the form of a board seat or something else that allows for those voting shares while still allowing a potential revenue share or some underlying asset that's also given to those shareholders. You could have dividends that come off of the protocol or percentages of transaction fees. There's many ways you could attach that. It would come with some different pieces to it, and it would act a little bit differently than it may if it was a utility token or a governance token, but you could absolutely do it, and it may actually be even more exciting for investors if they could have that underlying asset to anchor the price. So definitely don't consider being a security a bad thing. It could actually make your governance token even more exciting and more attractive for an investor passionate about the project.
Absolutely, Kyle. And with that, I think we can wrap up this show. Of course, you can always reach out to us. We're available on Twitter and on LinkedIn. We love questions. We love feedback. We love suggestions. We love hearing all the latest news from you. So please send it our way. And of course, check out the Security Token Market blog. You can check out stomarket.com for all the latest trading news. And of course, the What's Drippin' newsletter comes to you every Monday. So hopefully you enjoyed this show, and we'll see you next Monday.
Talk to you next week. Happy tokenizing.